Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts. Today is Sunday, April 12th, 2026. Welcome everyone. This is a swing trading and investing YouTube Charts channel. Stock market earnings season is going to start this week officially. All the big banks and finance companies will be reporting earnings. Earnings coming out from companies such as Goldman Sachs, BlackRock, Citigroup, JP Morgan Chase, Wells Fargo, Bank of America, Morgan Stanley, just to name a few, State Street as well. And then there's some insurance and a few tech companies. So there's Johnson & Johnson, Progressive, Abbott Labs, Taiwan Semiconductor, Netflix is the big tech company, entertainment company. US economic data, there's less economic data this week. There's PPI, core PPI, manufacturing index, and unemployment claims as well. There was breaking news this weekend related to USA and Iran. So last week, President Trump and the USA paused attacks on Iran for 2 weeks. So that's an estimated ceasefire until April 21st. However, over the weekend, negotiations with Iran reportedly failed. And so today, President Trump threatened to send a USA naval blockade to block the Strait of Hormuz even more. So that's a developing news story. Today's Sunday, so only futures is open. There was a small move in futures. That's something to watch out for this week. The economic data from last week was kind of mixed. So March core PCE price index data was flat. It met expectations at 0.4%. March GDP growth missed expectations, so it was lower than expected. It was at 0.5%. And the March CPI inflation data printed lower than expected, which is actually good, 0.9% instead of the higher number of 1.0%. So this upcoming week, we're getting PPI, core PPI data, and earnings is also coming out, and the next inflation data is not out until the end of the month. So earnings and the Iran conflict situation is basically the two biggest news of this week. Switching over to Trading View. All right, so today I have to show futures because we have breaking news. If I just show regular SPY, it will not show the weekend move because the stock market's technically closed. So just for this stream or video today, I'm doing ES1, that's S&P 500 E-mini futures. So after that news about the threatening the blockade in Strait of Hormuz, there's an initial negative 1% drop and then recovered. So it's about 0.65% gap down in the weekend. This is not surprising, actually. With the technicals, we went from an oversold Bollinger Band, lower band penetration strategy to an upper band selling strategy. So meaning I buy at the bottom and then sell here at the top. That's a real trading strategy. So it makes sense why that's selling off right now from a technical perspective. Also, the 4-hour went from oversold RSI to overbought, and then we get the gap down. So it's not totally random that that's happening. So the weekly is still in play in terms of we had this bounce, and then this low oversold, we had the bounce. So if we have a pullback, we can pull back severe. We just have to stay above 63.77 on this ES1 chart. For sure, we have to stay above 66.35. So that's why it's going to be very important to see not what I think or what retail thinks. We need to see what the big banks are going to do this week, what the big money is going to do. Talking billionaire funds. Will they continue to just sell into a lower high? Or meaning downtrend continuation? Or are we going to set this higher low? And if the actual Iran conflict actually calms down this month, there might be that chance. I just have to set the downside expectation. Also want to note that there was an upside down head and shoulders last week. So that target was 4% and it hit the target. The next target, if it happens to go bullish, would be 71.44, the blue line. And so this lower blue line is the neckline support that I'm drawing now. These are the two targets. So it would be 66.35 support and then 71.44 resistance. Let's go to Nasdaq futures. Very similar analysis that Bollinger Band and RSI play. It's very powerful. If it's just low Bollinger Band, it's risky. But if it's low Bollinger Band and low RSI, that's called, some people call that the rubber band drop strategy, or I just call it rubber band strategy. I have two indicators saying it's fairly oversold, and then we get that bounce into overbought. So stochastic RSI is overbought right now. The same thing, higher high, higher low, higher high. We can make a higher low. That's okay. Stay above 24.366. And then if we have anything good with the Iran conflict piece, then we can make that higher high. If not, the weekly chart, this could be the dead cat bounce, and then we can continue to crash if things get really bad for a few months. So that final line in the sand is basically 23,000 for NQ futures chart. That once we break 23,000 on the downside, then we're going to see more capitulation. Let's just skip to actual oil futures. CL1 had the gap up today. Let's see, the gap up was 10%. That's a lot. And again, it's not random. If we pull up the chart, yes, we had the initial flash crash. Prices held, but we flash crashed into a low Bollinger Band, low stochastic, low RSI. That's three indicators saying it's oversold, so low. And then if it wasn't sure, if someone doesn't want to play that volatility, there was double squeeze momentum that I like to call it, or just double bull momentum on histograms on the squeeze and the MACD. And then lo and behold, we have some breaking news that breaks it bullish. So it's not totally random what's happening. But for me, I don't have to trade every single thing that I see. I just need to zoom out a little bit, understand the news, the fundamentals, but also that, instead of trying to flip positions, is the better buy was way back here when we had that massive weekly squeeze. It's 4 weeks of squeeze going to February. Just a reminder for me. So resistance right now on CL1 is under 120, so around 119 is our resistance, and our short-term support right now is 95. So we're basically stuck in that channel, and until we get a meaningful break above or below, still consolidation, volatility, news play. Let's look at gold futures. Gold futures holding for now. We had that initial flash dump. My interpretation is maybe people overreacted and said, oh no, people thought the US was 100% sending a naval blockade, but then I reread the news and then it says it's threatening to send a USA naval blockade to Strait of Hormuz. So it's actually different. I think that's why the reaction rebounded, in my opinion, that there might be a chance for a negotiation or a backing off, potentially. So with gold, when I look at this weekly chart, all right, I see this morning star that still has some potential. Would be interesting to see gold get a double top just to really, really make sure we're not going to go above 5,400 resistance up here on gold futures. But the fact that we had that support kind of double inflection point in this zone, which is around 44.50, pull up pivot points, that's generally close enough. If I put up a weekly Fibonacci from 2025, I'm just setting my support and resistance levels right now. That makes more sense to me. We bounced off of the 382 and riding the 236 right now. So the support level 46.40 needs to hold, or else this could turn into a lower low. meaning we could get the dump, even though this looks bullish to me on a weekly. It's because of the breaking news. So we had that correlation. We went from oversold to overbought. So it would make sense if we pull back down again, reset stochastic RSI. There's still a chance for that squeeze momentum or the MACD histogram to reset the momentum one more time to see if we get that pullback into a bounce. That's what it just reminds me of. If it's going to be technicals only. All right, so I think that covers futures. I'm going to try to make a shorter video today. Let's just go to crypto because news is everything right now. So right now we're on total crypto market cap chart on a daily. Let's start with weekly. Weekly, I love to see that double bottom, but because of that breaking news, Bitcoin had a little flash pullback. But I do like that we hit that double bottom off of 2.25 trillion, that resistance we need to break above 2.46 trillion. And it's still the 200 EMA, so we're not in the clear yet. I need to see that break way bullish in the next month or two. So we see that the double bottom is turning into a consolidation. So there's still a chance, unfortunately, for bulls and for anyone holding right now, that this could still be a death cross bear trap. I mean, it's bull trap, meaning bears are trying to trap the bulls. Meaning this is a death cross, is still downtrending. Last time we had the bull trap, whale sold off and then we crashed. That could happen again. So I'm just keeping an open mind to see, okay, will the 50 EMA at 2.4 trillion or 2.6 trillion, is that going to reject again? And again, we have to break above 2.5 trillion to even get that chance at a breakout. So support definitely needs to hold. 2.2 trillion down here definitely needs to hold. So switching to the Bitcoin chart now, which looks very similar. I use BitFinex. Bitcoin still in the downtrend, death cross, downtrending. Remember that last bull trap turned into rejection. So this structure that we're in, which is actually turning into a symmetrical triangle. So it's still chance to break both ways. And the conservative price target would be 6%. The maximum price target would be 20%, basically. So average 13%, about 13, 14%. So if we break out, 13% would be 82,766 Bitcoin or 83,000, that red EMA line at the top target. If we break bear, that target would be 57,637. Most likely, if it breaks that bearish, it'll probably crash to like 40,000 Bitcoin. So just remember, the death cross is still active. It's still in play, and it's not 100% clear to the charts and to me yet that we're having a full reversal. I need to see massive higher low, higher highs for at least another month or two to say like, okay, we're probably in the clear here, that we're getting uptrend reversal. It's not happening yet. The only good thing is, if I have patience and not get emotional from the news, is we hit that low RSI on a weekly chart, double MACD momentum, squeeze momentum's in place, stochastic RSI bounce, double bottom off of 200 EMA. The investor in me still wants to hold, because when we hit that 200 EMA, it's a rare event. And so if it was going to fail, it should have failed a lot harder, in my opinion. So yes, I remember 2 weeks ago I was saying we could have the negative 80% drop, but it looks like it wants to trading support hold for now, at least for, I would say, this month. That's what it looks like to me. That would change if some whale or institution just walks into the market and sells like $1 billion Bitcoin, then we're going to crash again. Let's go to Ethereum USD. So Ethereum USD on the weekly is a very similar setup. Stochastic RSI bounce, double MACDs and play, green histogram open for this week. Tap that RSI low. Daily chart still in the death cross, downtrending with the price, potential bull trap that I want to watch out for. As for a swing trader, it went from oversold stock RSI to overbought. And the regular RSI is at 56. It's not really low anymore. So what that means for me is this little squeeze on the TTM just reminds us that support is extremely critical for altcoins right now. Altcoins are not, this almost looks like an ascending triangle. So I don't want to get people's hopes up too much, but holding this support level, we have to hold above 2100 support. Once we break out above 2400, retest 2300, and then we get the higher high, then maybe somebody could call that we have an uptrend reversal on Ethereum. So again, breaking news is so critical. Whatever's happening between USA, Iran, even China, even Israel, in terms of what's happening in the EU as well. We're getting corporate earnings for 4 weeks straight. I mean, there's a lot of and inflation data. There's a lot of potential breaking news. So whatever we're looking at today is just a portion of the important data. The chart is just a small little percentage of what actually moves the market. So I have to pay attention, at least for me, I have to factor in the fundamentals a lot more than a chart. And the investor in me from experience knows that when crypto drops 80%, altcoins 80, 90%, then that's probably some relative bottom. On Ethereum, that actually did not happen yet. Last time that happened on Ethereum was in 2021 down to 2023. That was a negative 75% move. If that happens on a top 10 crypto, like a XRP or Solana or Ethereum or Bitcoin, then in my opinion, it's time to just buy. And especially if we have a double bottom, like in my highlighting here, and a higher low, then it's definitely time to buy. So when we get a single little tradable bottom or a single little V-shaped recovery, it's not really 100% clear if it's going to reverse or not. But the most recent price action copy paste that I can think of and see on the chart is 2025, 2026 is relatively, I would say, more close to 22 to 23 in terms of visual structure. So if this double bottom is going to break bull, I need to see it happen pretty rapidly in 1 or 2 months. Otherwise, the only other good scenario that I could think of is if it bounces, that's okay. If it fades down again, then maybe that's okay too, because we'll make a larger double bottom. So those two scenarios are okay with me. We'll know we're in trouble when we have like a 2018 problem. Lower low, lower high, and then if we have nonstop crash for 1 year straight, or 6 months straight, I should say, 6 months straight, then we have a problem. So if we'll know we have a problem that every month we just can't, the price can't reverse and go up, then we know we have a problem this year. So it's still in a kind of holding period, but it's good that the price is negative 60% off. So it's closer to the bottom downside than versus July, August 2025. Hopefully that makes sense to everyone watching. All right, thank you for watching. Remember, it's always about managing our risk and capital. Very important. And factoring in the fundamentals, corporate earnings, sentiment, data is more important than emotions. Hope you have a nice week. And I'll see you in the next video.